everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're doing the week ahead. I'm going to get you prepped and ready to trade the next 5 days in the markets. I think it's going to be an interesting week. It's already started off on just an absolutely horrible foot. Let's get right out to price action, and you can see that this is just blood red. I always have my tote board up. I always want to make sure that I'm referencing my tote board, and what you see right here, that is all blood red. And what happens is typically when we see the markets sell off, they sell off in a broad fashion. What's interesting here is we've got the big bounce down in gold. We've got the big bounce in silver, not to be unexpected. But we've also got just a tremendous bounce in that VIX, that volatility index, the VIX. The CBOE volatility index comes in right around 2173, which is up about 12%. That's a staggering jump. There is a lot of angst in the markets today. So we're going to talk about some unconventional market drivers. I've sort of been having a bit of a spat, I guess you could say, with ChatGPT and artificial intelligence. I asked some very hard questions, and I was really surprised at some of the answers I've got. I've got sort of leaning way into this AI boom. I mean, I cannot believe the amount of information and resources we have at our fingertips right now. But I sort of put ChatGPT in a tough position. I said, hey, why are the markets melting down? And they said, well, it's a mix of things. And there was a big arrest in the Epstein files. And I don't want to sit here and I don't want to be a conspiracy theorist because, they typically turn out to be correct. It just takes a decade or 2 decades before the conspiracies play out. But there's absolutely no denying this now. There's no denying this now. We saw Mandelson. I'm going to show you this in a minute. Ex-UK ambassador Mandelson was just arrested. They took him on the streets in London. And this is going to escalate. And believe you me, this is going to spill over into the financial community. There's no way that it can't. And I feel like I have to tell you guys the truth. It is the underpinning of these markets. If you see high-profile arrests, if you see high-profile people being taken off the street, especially in the banking industry, when you start to see that happen, there really is no floor to how low these markets can go. And I'm not trying to scare anybody, but we have to be sober. We have to be ready to deal with whatever comes our way. I love Mondays because Mondays are a great day to prep. Today would have probably been a great day to trade. I'm sure a lot of you have made a lot of money just getting in on the sell-off here in the U.S. indices. I can almost guarantee you, we'll pull up an orb. We'll pull up a 15-minute orb here. I can almost guarantee you that the orb worked. Almost guarantee it. I'll take a look at it here in a second. But I haven't really looked at equities this morning other than my tote board, and I got to tell you, that is a red one. That is like a COVID tote board. That reminds me of the COVID-19 era when, man, you just were going limit down, limit down, limit down. And it's really something. It really is something today. Fantastic price action, though, in WTI crude oil. Some great trades, great rotational trades. I love a flat market. I don't know. You guys pretty much know how I trade. I'm not really a huge trend trader. I love flat markets. We had a fantastic one to trade today in WTI crude. So I was a little bit, I'm happy, I would say, but I'm not necessarily blown away by what's going on in the news cycle. I think that there's a lot of underpinnings here that we just don't know. And I'll be the first one to tell you, I'm out here in remote Montana in the United States. If I had some high-powered friends, I would call them and ask them what the hell's going on. We don't know what's going on. It feels like there's something there that we can't put our finger on. And I call it my spidey senses, maybe my 7th, 8th sense from being a trader for most of my adult life. This feels weird. This feels really weird. So I want to welcome everybody back to the trading room. Thanks for giving me a little bit of time there at the beginning and sort of stretch my legs and just try to explain really what we're seeing. We've got some trade ideas that we're going to go ahead and update you on. We've also got the 9 EMA strategy. Remember, if you want to trade anything, check out our 9 EMA. We've got a lot of great feedback on this. There's a couple of tweaks that I think I'm going to make to this strategy that are going to make it a real banger, but I like this strategy. I think it has an opportunity to, if nothing else, stimulate some thought and get you up and running there. So be sure to check out the 9 EMA if you're brand new to the live streams. We do get a lot of folks coming through for the first time each and every day. So good to see everybody out in YouTube land. Tina Jean, good to see you, Tina. Welcome. Hi. How are you? I'm doing very well. Let me see. Wow, even ChatGPT knows that. I got a little bit of a fight with ChatGPT today. I was asking it some questions and it didn't want to answer me. And I said, why are you answering me like that? Come on. Give me the goods. And it couldn't answer what I was asking. And basically it was insinuating that I was a conspiracy nut And I said, no, I've been in the markets a long time, chat. So interesting dialogue, though. Maybe I'll print some of those out and put them online so everybody can see how I talk to ChatGPT. But I will be honest with you. I've got the 5.2 version. I had to upgrade because some of the things that thing can do, coding. I mean, that was always the joke, right? You don't have a job, learn how to code. That was the Obama administration. Unemployment's at 10%. You don't have a job, you don't learn how to code. You don't need to learn how to code anymore. Honestly, you don't have to do it. You can go to the AI. The AI codes better than coders code. And if you're a coder, I don't mean any offense to your craft, but I got to tell you, I mean, I am not a computer sophisticant at all, and I can code, and it feels good. It feels good to be able to code. Thanks, ChatGPT. So good to see you, Tina. Welcome, always welcome, Jason. Sup, Shane? Sup, Jay? How you doing? Let me see, babe. Geez, hey Shane, I hope you're well. I'm doing fantastic. Got a couple of questions here. No heavy spikes as I expected today. I don't know, man. Bab, there's a serious spike there in U.S. stocks. It's going down, and it's going down in a big way. So we're going to go ahead and show you a support level. If you're in the How to Trade trading community, I haven't really listed this week's stream schedule yet, and it's not because I'm lazy. Well, I'm not really lazy. I typically like to work, but I was curious about what's going to happen this week. We're going to be on about the same time every day. I'm just not really sure what we're going to cover every day, so I didn't want to put the titles out because I have a feeling that this news cycle is going to bring us some absolutely huge heavy hitters and market movers this week. It just feels like it. It really does just feel like it. So good to see everybody in the How to Trade Trading with Lita. Good to see you, Lita. Jeanette, up in the middle of the night or bright and early, down under. Good to see you. Andrea Garwell, always a pleasure, Andrea. Ralph H. Hey, Shane. Hey, Ralph, how are you doing? It's a good day. Bobby Bob, good to see you, Bobby. Weird, how good or bad? I think that the markets are going to crash. It feels to me like there's an underpinning here that we're not seeing. And I'm not going to spend any more time on it because we've already talked a lot about it. But that's my gut feeling. So, we can make a lot of money with our guts. We really can. And when you take a trade and it feels wrong, typically it's going to be a loser. And this feels to me like something's going on. And a lot of it has to do with the cartels in Mexico. Just an explosion of violence down there. If you're in that region, I mean, thoughts and prayers, and we're curious how this is going to boil over into the United States. What happened over the weekend with the cartels, specifically yesterday afternoon, definitely driving angst. There's no question. The Epstein files, the UK ambassador getting arrested on the street, that's a big one. We're going to cover that too. But we do have to think about what does all this mean? It's information overload. It's information overload, right? What does it all mean? These are things that don't typically move markets, but they are. So we have to remember that the structure of the market itself is of paramount importance. And anything that threatens that structure, anything that threatens maybe I won't say the sovereignty, but definitely business as usual in the United States is going to hurt things. And right now we're seeing it. We're seeing the selling come in, a lot of uncertainty out there. There's no real reason for us to be selling off like this today other than the tariffs. That's what the news is going to tell you. It's about the tariffs. I don't think this is about the tariffs. This is something different. So it's good to see everybody. Bobby Bob, hi Shane. How was your weekend? Great. Want to give a big shout out to the United States Olympic hockey team. Fantastic. The men and the women both got gold. Hockey's a big deal, especially this far north. And watched the game. Got up bright and early yesterday and watched the game. And just an absolutely amazing gold medal game. The women earlier in the week had a fantastic goal to win, and the guys got a fantastic goal to win. That was a big game. So if you're in Canada, I feel you. I know what it's like to lose big games, but I got to tell you, the Canadian hockey team was absolutely amazing. You guys did everything well. And when you watched Canada play, I mean, just the way that you cycled and the way you got pucks deep and dominated that game. We were sitting here at 8:00 in the morning in Montana, and I was just in awe of how really truly good you were. And our guys brought it, and they came out on top. But truly one of the amazing sporting events that I've ever seen. And I just over the moon at the level of competition. It was a shame somebody had to lose, because that was a really strong game. And I feel like that in trading a lot. Sometimes we get caught up in the dollars and the cents and the wins and the losses, and we don't really remember what we're doing every day. You can be a very, very good trader and lose money. You just can't do it for very long, or you won't be a trader very long. So good to see you. Let me see you. AJ, hi, man. How you doing, AJ? All right, guys, let's get right into it. 5 a.m. here in Sydney. Jeanette's up bright and early. All right, Jeanette, let's talk some gold. We've got to look at gold. I think it's finally broken. I think it's broken from 5,000. A lot of it has to do with the market angst. We got a couple of trade updates. Let's go ahead and start there. Let's see. The Kiwi, fantastic trade. I mean, this was one of those trades that this is a clear-cut weekly Fibonacci retracement sequence. Love it. Love 38%. Love 62%. I'm not a 50% trader. However, when you're trading the euro US dollar, you probably need to consider the 50% level. This right here, though, 38% was absolutely just a banger trade. A nice little 35 pip trade, 40 pip trade. You can see we came right off last week and just smacked right against that 38%. I got a beautiful bounce. Bounce was up there right around 60.03. And let's go ahead, take this down to about a 30-minute chart and show you exactly how the price action behaved around that support level. And I got to tell you, I mean, it just doesn't get any better than this. It really doesn't. We came right down, beautiful strike, hard strike, bang, right there. Got a nice bounce. And even if you held right there, I wouldn't have blamed anybody. I said, okay, I don't want to take the profits here. I'm going to go and hold. Down in here, we don't feel as good about it. But then the bidders stepped in, and they really ran price higher right up to that 60 level. So when you're buying 59.50s and you get a 60 print, that's pretty good work. That's pretty good work. It's about 40-something pips, I believe. What were we shooting for there? 35, something like that. I really see that as being a high probability trade. When we start talking about weekly Fibonacci retracements and we do it on a major, the beautiful thing about this pair, especially last week, was the RBNZ stepped up and got involved and gave us that volatility that we needed. And we got the nice sell-off, and then we got the bounce, and it was just, honestly, it just doesn't get much better than that. I mean, that is trading. When I think of myself in the markets and I think about Shane, what are you? I'm a pure trader. I'm a pure trader. I like buying and I like selling, and I love doing it at great trade locations. It makes me happy. I mean, I'm not kidding you. I had a gentleman that was a real estate agent, Pat McNulty, who passed away. I actually worked for him. It was back in my younger days, guys, back in my early 20s, and I was just trying to make a buck to stay alive. And I was mowing grass for him, and I remember he was sort of a big shot real estate. His family's really big here in Montana, and he was an incredibly kind man. He's very good to me. He was killed in a motorcycle accident while I was working for him, but he told me something that stuck with me to this day. And he says, Shane, you don't make money when you sell something. You make money when you buy something. And so when I talk about trade location, it's about trade location. It's 59.50. I loved it. I mean, that was when we got that entry, we just rang the cash register and walked away. I knew that once we got that entry, that's a banger. It's over. The hard part for us was waiting and getting the entry. And that's absolutely fantastic work right there. And a lot of people don't believe in Fibonacci numbers, and you don't have to believe in them. You can believe in 9 EMAs. You can believe in 920 crossovers, which is probably going to be the next strategy that we put out there. It's a beautiful strategy. It's a lot different than the 9 EMA. But you don't have to just sit here and say, okay, it's lines on a page. How am I going to make money from the lines on the page? You have to actually understand what's happening here. Think about what happened here. We had this beautiful run up, this big breakout, and then we got compression. This compression right here, I loved it. We started going sideways, and I said, yep, we're sideways market, right? Sideways, still bullish, sideways market. We know we have a great opportunity to buy a trough right there. We know we do. And that's one of those where I just sit there and I was smiling. I said, man, you guys are going to love this trade. So that was a really good one. It's funny because I get a lot of conversations. I mean, that's pretty much what we do here is we work with traders. And I've had an opportunity to talk with many of you, and some very, very far down the line in their journey, been in the market years. Others are brand new. And it's trades like that are like, man, this can be really easy. And it can be really easy, but things have to line up for you. And we're dealing with some external factors here that are going to make it not easy. I mean, there's people right now that are debating whether they're going to take their millions out of the market and go home for a while. That's the debate. There's systemic concern about the entire financial system. I think that we've seen the precursors. I can build the case right now just from silver price action that the volatility that we've seen in the silver market is some sort of a precursor to maybe some major financial upheaval. And I think we're seeing it. I really do. I don't know how low the markets go. I don't know that that's a crash. And I was fighting with ChatGPT earlier, and they was like, you got to relax. You got to relax. And I go, don't tell me to relax. I've been doing this since 2011. ChatGPT, how long you been around? Granted, you know everything in the world, but I know this. This feels different. We're going to have more later in the week. That's all I can say. Tune in every day. We're live at 1600 GMT every day this week, and I think it's going to be a fun week. I'm excited. I don't really do much on a Monday, trading-wise. You guys know me. It's all about game plan, get ready to rock and roll. But Tuesday, Wednesday, Thursday, if we don't make you have an opportunity to make your monthly nut in the next 72 hours. This looks to me like it's going to be really good. In any case, let's go right here. We got a trade update. Supreme Court rule strikes down Trump's tariffs. GDP plummets. US 30s in play. I love this trade. I think this is a pretty good trade. This is a monthly Fibonacci retracement sequence, and it's coming right to us. It really is coming right to us. So what you've got is just a really beautiful since last April's tariff sell-off. And I mean, it was a banger. Let's be honest. We thought that the world was ending financially. Right there, the markets were starting to crash. I was online. A lot of you have been around, especially in the How to Trade community. You remember the coaching team that was here for the past several years before they all moved on and went on to other things. But both Nick and Connor, we used to sit around and talk about, I would sit there and say, hey, listen, I think that maybe 2025 is going to be a bad year for stocks. And I remember Nick going, Shane, I mean, the stocks are going to go up. And I go, yeah, but there's going to be a correction in here. And I had a trade all dialed up. I had it was going to be an options on futures trade. I was going to go ahead and sell the E-mini S&P 500 and take a shot. And it was a good trade. It really was. This spike here, though, I have to tell you, I mean, I was looking for something maybe like a COVID correction. Didn't get it. Look at that. Big time spike, and then we've rallied ever since then. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I mean, you guys get the meaning. It's been up every single month. There's a chance that this US 30 closes in the red this month. Now, it's the 23rd of February. Typically, everybody's already planning their beach getaways. Spring breaks around the corner, and everybody's going to the islands, and they're thinking, March is a huge month. You need to be in your seat trading if you're going to trade. March is a big one. April's a big one. If you want to take off a couple weeks in April, that's fine, but definitely be in the saddle for March. You don't want to miss March. Look at that level. 47,750, right? So 47,750, what does it mean? Well, on its face, it means nothing. It's just a bunch of numbers. But what it is it is a legitimate support level. And I mean not a little one, but a big one. If that level's taken out, that 47,750 area, if that gets washed out by the US 30, then we're going not just a little bit lower, but we're going to go a lot lower. And to me, this has the feeling, potentially, of being one of those points in time where you say, Shane, is this thing going lower? Like, how low is it going to go? We're going to cut interest rates. We know that's coming. That's going to be bullish for stocks. But the fear right now in the market is no joke. This VIX, up around 21, that's our long-term average. I'm going to talk about that in a second. But what it all means is we can't quantify what's going to happen to the financial industry right now. And this stuff right here, I talked about it last week. This isn't a conspiracy podcast. This isn't a conspiracy stream. We talked about it last week that was only the beginning when we started to see people put under pressure. Prince Andrew's put under pressure. Call him Prince. Call him whatever you want. I don't know. Andy. I'll call him Andy. They threw Andy in jail, right? So this guy right here, this Mandelson guy, arrested in London. That's a big deal. And it's not just because it's tied to this giant scandal. It's because of where it was done. It was done in London proper. What you're seeing is the financial markets. London's one of the big ones. It's London and New York City, basically. Those financial centers are trying to regulate this scandal, and they're trying to put everything in perspective for everybody that's playing the markets. They're saying, yeah, this is the way it's going to be. It's going to be law and order, and we're going to do it this way. The fact that it was done in London proper is a big deal. It's a signal. It tells us that this won't be the last one to happen. You're going to see probably big arrests in New York City. It wouldn't shock me if this week is the week of arrests. Now, what does it all mean for our markets? It's going to be potentially a liquidity issue. It's gonna boil down to, okay, well, this person was here, this person's under fire, they work for X company, and then all of a sudden the financing to that company dries up. Or maybe this person worked for this bank, or this group of people work for this banking entity, and then all of a sudden you're not going to get the financing maybe from the Fed itself. You got to remember, Jay Powell is under DOJ investigation for perjury. This spring is going to be huge. And I think you're seeing some of the stress fractures. Now, are U.S. stocks a good buy? I'm not going to sit here and tell you that it's not time to buy the dip. It's not time. Wait for the sell-off to get a little bit worse. But honestly, that 38% is fantastic. And that's basically what our trade idea is all about. It's about getting in with great trade location. If you do get a pullback to that 47, 750 or 40, 48, whatever. I mean, honestly, we're not going to be exact right there, but probably within 200 points, I would say 250 points, you're going to see this area be very, very, very serious, and it's going to be filled with bids. So if we do get that pullback, that trade idea should come our way. And I'm excited about it. I got to tell you that New Zealand dollar trade made me born again. I felt good, made me smile. This one right here is going to make me smile too, and that's great. All right, week 9. I believe it's a calendar week 9. I don't know, trading week 8, whatever. You know how the weeks usually get messed up right there at the beginning of the year, like a half week or whatever. But in any case, week 9, I'm going to go with week 9. Sounds good. Monday's quiet. There wasn't much happening today. We're going to look at some T-bill auctions here in a second. We're probably going to not talk about conspiracies anymore. I'm sure everybody on YouTube's tired of hearing it, but it's very important that we understand as traders what's happening. So just because today's quiet doesn't mean it's quiet. So, quiet. Tuesday, CB consumer confidence. That's a big one. Now, we saw consumer spending really, really, really come down off that horrible GDP number we got last week. The real question is consumption. What levels are consumption? We don't really know. We know that, I'm sorry, I got some breaking news right there. All right, that's not important. Okay. Got to check the breaking news all the time. In any case, CB consumer confidence is going to be a big deal because we're trying to figure out what's going to happen to the American consumer. Are they going to spend money? Or are they going to hem it in? Last week's GDP numbers were garbage. They were a complete garbage can. And anybody that tries to spin that is just lying to you. They were bad numbers. Everybody sees the tick higher in core PCE and PCE, and they saw GDP come down. It feels maybe a recession. There's going to be some recession bets on there. We got to wait and see how that pans out. But CB consumer confidence, believe it or not, tomorrow is going to be a bigger deal than you think. JC, good to see you. JC, welcome. I'm sorry I missed the message there. We got some message. I'm way behind on the live messages and live chat. I'll get right with you. Let's see. In any case, Trump's State of the Union. Now, listen, this is Tuesday p.m. So this is tomorrow night after the market's closed. So I put it in Wednesday's session. It's going to be a big deal. Trump's going to say a lot of things. It would not shock me if he announces another huge tariff hike. Now, you'll notice I haven't talked at all about tariffs because I don't really believe that's what's moving the markets. I think that the tariff announcements were to be expected. Now, the Supreme Court announcements on Friday, we covered this Friday where they just basically squashed the tariffs, and then Trump comes in and he does executive order tariffs, whatever. The bottom line is this, that a lot of that's baked into the cake. I don't see that as being a huge market driver, but anytime Trump talks, they're going to move the markets. Be careful. Tuesday's session. We'll talk more about this tomorrow. I'll probably preview his speech and talk a little bit about what it could mean to the markets. But that Wednesday session, look for some really crazy ranges going into the London Open Wednesday. So that's why that's posted for Wednesday. Thursday's jobless claims. I don't really care. Weekly jobless claims. We'll see. We'll pull it up. We'll talk about it, but I'm not over the moon. It could come in great. It could come in low. It doesn't really matter. I think we're feeling an economic slowdown, and that's going to really be the next NFP, the next set of numbers that's coming our way here in about, 2 weeks? No donation Friday. Nothing Friday. We're going to make a bunch of money Friday, and we're going to take half it home with us. That's it. All right, news of the day. 3-month T-bill auction, 6-month T-bill auction. What does it mean? Higher yields mean what? Lower yields mean what? You see right there, yields are down, yeah? Well, I mean, the 6-month T-bill auction's up a little bit. The 3-month is down. What does it mean? Just real quick, and then I'm going to tell you what it means. 5, 4, 3, 2, 1. All right, what it means really isn't anything. Don't get too carried away with these yields right now. The 3-month T-bill down just a little bit week over week. I'm not worried about that. 6-month T-bill, we're looking for big spikes, big moves in these. The fact that the 6-month T-bill is ticking a little bit higher tells us we're probably not going to get that rate cut, at least until June. I know somebody who's been saying that. For a while. You're not getting a rate cut anytime soon. It will be June when the new Fed chair comes in and sits down. All right. Everybody wants to know about gold and silver, so let's go ahead and talk gold and silver. Then we'll maybe see if we can find a 9 EMA setup. This is fascinating to me. This is our gold market right here. This is gold spot US dollar. A couple of observations. I've been really harping on the 5,000 level, and I've been doing that for a while now. And there's people out here that watch these live streams, and I've had an opportunity to meet many of you, and it's fantastic. Not in person, but via video chat, video conferencing, and it's great. I love to see the folks out there trading. I love to see the offices, and everybody's got their own strategy, and you guys are in the market, and it's great. It makes me happy. I mean, it really is true capitalism, and you may not think you have anything in common with me at all, but you do. You have a lot. You have a lot in common. If you're sitting in front of these screens and you're doing this work, you have a lot in common. I have talked and heard some absolute horror stories about the gold market over the last 6 weeks, really since the beginning of the year. And I've heard some of the back office with Switch. This partnership, How to Trade with Switch Markets, has been an absolutely fantastic partnership. And I have an opportunity to talk with some of the folks at the back office at Switch. And they were telling me about just some absolute horror stories about people that really got hurt by the gold volatility, and they were holding positions over the weekends, which we talk a lot about. You open yourself to an incredible risk profile. I'm going to leave it at that. But those folks got hurt. I had an opportunity to speak with a young trader, somebody who's just in the market, a fantastic gal, very, very smart. She was very, very smart. She is very, very smart, and absolutely has the aptitude to trade these markets. But think about what happened. You started trading gold when gold really was as crazy as I've ever seen it. And you look at these daily ranges, it's as crazy as gold's ever been. Look at this. So I talked a lot about the average daily range, the ADR last week. The ADR's got to come down before I even consider trading gold. And the reason why is because it's not necessarily that I'm scared or that I'm afraid of making the big money on the big ranges. It's that you don't have enough cash to really hold any position at all. The volatility is so huge. So I was speaking with this young lady, and very smart. I was listening to her strategy, and I was listening to what exactly her experience was in the market. And she was trading gold. She started her trading career trading gold. And I trade gold. Could have happened to any one of us. The volatility was so huge. What do you guys think was the outcome? It was make a bunch of money and then give a bunch of money back, and then maybe slow down a little bit and get some education on what exactly is happening. Very mature decision she made to stop and slow down. Because I've been on those runners where you don't stop, you keep going. And sometimes it gets better, sometimes it gets worse. The volatility that we've seen in the gold market is no joke. If you got chopped up in January, it probably wasn't really because you were doing anything wrong. It's just that the movement of the market was so vast that it just chopped you up. And I mean, we'll have a little psychology session here on a Monday, I guess. This type of stuff right here, those are account busters. That's a 9% move in a friggin' day. That's huge. That's absolutely huge. Look at this one. 3.5%, flat, 9%, 5%, bounce back 6%, doji, off 3.5%. I mean, it's craziness. So I've heard a lot of horror stories. I'm sure there's some of you out there that have traded gold very well and made some money. And congratulations. It really was great work. This is sort of the maturity end of trading. I started seeing this stuff. My ADR, average daily range, is a big deal to me. Once those ADRs start getting elevated, like they were right in here, started to get a little bit spooked. I was like, well, October, lost a lot of money right in here. July, probably that spike right there, middle of July, came out of nowhere, got me. But this type of trading, for what I like to do, that's easy money. Just rotational. Look at the days. I mean, these are all days of our lives, but look at it. It's easy. It's ebbs, it flows, it comes back. This type of thing right here is where you see everybody on CNBC sits around going, oh, I told you the gold. I listen to a lot of these guys, these gold bugs, these silver bugs, and they all tell me, gold, it's going up, it's going up. I go, oh, yeah, really? Where are you going to buy it at? Did you buy it here? Did you buy it here? Did you buy it here? It's tough. It's a lot harder than that, and you all know that because you're in the markets every day. But I want you to really look at the size of these candles. I always say this, but it's important that I always say it for the new traders out there. I've been in this game since 2011, and I'm still alive. I still have a roof over my head. There's cars in the garage. Okay. This type of thing right here beats the heck out of me. Get out. If you don't know, get out. And I've been sort of preaching about 5,000. I've listened to trader after trader just get chopped up at 5,000. So what do we want to do? On your charts, you should be drawing just a couple real basic pictures. That's a 3-day range right there. You've been trading inside of it for the last 4 weeks. Boom, boom, boom. Now you're rotating. Have we finally left 5,000? I think there's a chance. I think there's a chance the uptrend continues. There's no question we're long-term bullish here. I can show you the technicals. It's a waste of time. What we can do is say, okay, where do I want to buy from? Well, you're up right around 52. It's fantastic. Could we draw Fibonacci here and get us involved? Of course. The problem is getting this to sort of set up as a nice swing high and then get a beautiful pullback. That right there, if we push just a little bit higher, maybe up in here, that's what we're talking about. We get a nice top and then a pullback, 62% on a daily, lined up beautifully with 5,000. That's the scenario I would love to play out later today, or excuse me, later this week. Now, is it going to happen? Well, you're up 2% today. So we can't sit around and hope it comes back. That's why we trade a bunch of markets. But you sit around, and I know exactly what we're going to do when this thing pulls back. We're going to get in there and we're going to bid. Could you bid 38%? Yeah. Could you bid 62%? Yeah. You can bid it all. But what I want to do is I want to get that banger. I want to get that trade that you legitimately sit there and go, that's a winner. Like that Kiwi trade. You sat there and you went, the hard part's going to get the pullback. If we get the pullback, sucker's over. You know, I feel the same way about the US 30. If we get the pullback to that level, we're in great shape. But this right here, this is a little dicier because it is explosive, and there's no question. Look at the volatility is back. Last 2 days, bang, 2.25%, bang, 2%. I mean, that is a rally. This thing's taken off. The question now becomes, do we buy it? Do you buy 5200s? I don't think you need to. I really don't. I mean, at this point, you're just trying to get in on something. That is FOMO, fear of missing out. That is all that is. That's a FOMO trade going, oh, I don't want to miss the big move. Well, who cares? There's a million there is a million markets out there we can target. I haven't even talked about equities. We can get into equities. We can get into individual stocks. We're going to talk about NVIDIA in the newsletter that's going to drop before the London session. We can trade so many different things. You don't have to just be married to gold and force your way in and out of the gold market. You don't need to do that. Wait. Be patient. Wait for this stuff to come to you. I'm telling you from experience, if you're disciplined and you're smart and you wait, those winning trades, I mean, it's just like a big juicy apple. You just eat the apple and you go, man, that was pretty good. And you know, of course you want more apples, but you know, maybe we got to wait a while to get the next apple. You're not going to win every trade. I never said you would, but man, when you hit your trade locations, you'd be absolutely shocked at your success rate and how it goes up. Little psychology lesson, right, on a Monday. I got to get back to the live chat there, guys. I'm way behind. This is interesting. Euro US dollar, you can see we sort of just rotating around 30-minute chart. Really a beautiful formation. I say beautiful a lot today because I'm happy. We got the gold medal. Pretty happy about that. But this price action right here, a lot of folks are going to look at that and they're going to go, that's terrible. And I go, it's actually really, really great. Spike high right there, spike low, and look at what you have right there. That was 22nd of February. That was yesterday afternoon. Nice big sell-off. And now the rotation's fantastic. 62 was a winner. Got really beautiful scalps right there on 38%. Not real great on 38%, but the big thing I want to point out is look how tight this is. You know, 118.11 to 117.97. You're basically just rotating around 118 for the Euro USD. So to me, do I want to be long or short? Neither. Don't really care. Don't really care right now. Just looking at that going, it's pretty good intraday trading. You really couldn't mess up. All you're doing is selling up here and buying down here. It's not that hard, but what you can do if you want like some longer term levels that maybe I'll highlight the Euro USD here in our weekly hot picks, the hot picks video that drops tomorrow. I don't know. Still debating on which markets we're going to cover. Right there, spike high, and then your spike low. And what do you got? You got a couple of dojis off of our big long-term level. I'll show you that in a second. And then the pullback are right there to 50%. You start to see why I'm coming around to 50% with the Euro US dollar. It's a rotational market. It's not that fancy. It's what I would call a grinder market. I mean, this is the lunch bucket. This is the lunch bucket and the hard hat. You're showing up. I mean, it's trench warfare, 3 yards in a cloud of dust. That is the Euro USD. You're not going to get in on these monster moves, especially if you're an intraday scalper. It's very, very slow. It's methodical. You got to have a lot of patience. I don't particularly like trading it, but it is lucrative. So you got to, it's like, I honestly, if I had my druthers, I would trade crude oil all day long. The Euro USD is boring. For lack of a better term, it really is boring. But hey, listen, what was it? Vanderbilt? George Vanderbilt? God, please give me a boring business. Well, there you go. It doesn't get much more boring than the Euro US dollar. But this rotation right up around that 50 level, it's pretty good. I mean, I would probably amend my own personal rules to be buying or selling that 50% retracement. I don't like it. I don't do it in any other market, but Euro USD, you may be able to get away with it. So you see right down here we have some support zones, so let's go ahead and just line those up and see exactly where they were. We had a great message actually last week from Andrea Garwal, and she told me, she said, hey, Shane, that thing hit beautifully. We had a Fibonacci retracement sequence, and we had a weekly moving average. So I'm confident Andrea's still counting some money. That's fantastic. Look at that. So a big tip of my cap, Andrea. That was a great spot, 62%. And the moving average, I mean, 117.64 is your 13-week moving average. And then you've got 62% right there, right around 117.70. I mean, that's one of those deals where, I mean, you're making the pizza. You've got the dough. You've got the sauce. You've got the cheese. That's beautiful. I mean, that really is. That's the word of the day today is beautiful because we're finally starting to see a little bit of structure set up, especially in these Forex markets. And that's fantastic. The dollar is behaving exactly how we knew it was going to behave. We're going to see probably more bearish price action out of the USD. Do you take a position here? Do you take this and hold it? Do you buy this thing and hold it into perpetuity? I mean, swap fees and all sorts of different things you have to consider there. But this right here, is it a good play? It's probably a good play to be holding longs from 118. Personally, my own personal portfolio, I'm not holding any longs from 118, but it's not bad trade location. What's trade location? I probably should have started there. What's trade location? It's the opportunity maybe to buy towards the bottom or sell towards the top, right? Well, if you buy right here at 118, are you really going to get hurt? Does it feel like you're going to get hurt? There's only a couple things that jump off that chart that bother me. This right here, that bothers me. That might get filled in. Potentially we could creep lower from here, but you're not going that much further lower, like 100 pips. So if you took a position here and you were to the long side of the Euro USD, you're going to know if the thing's screwed up and 100 pips. So something to think about there if you're thinking about a position trade. I'm in the Euro USD. Okay, we just got some notifications. Absolutely fantastic. Here's our 9 EMA strategy. What do we just get some signals where? I was doing all sorts of different time frames and things. Euro USD 15-minute chart, not interested. Beautiful buy there, though. I mean, making money today. Dollar yen, look at that. Dollar yen. That's fantastic on a 5-minute chart. Absolutely great move. Nice bump here. Nice bump here. This was a loser, but that's the one you get in on. And if you're holding for 1 to 2 or 1 to 3, that's a beautiful payoff there. 5-minute charts, though, trading Forex pairs, dangerous. You're living dangerously. This type of situation right here, fascinating stuff. Let's go ahead and just fast forward. MT5 always confuses me. Finds a way to confuse me every time. Let's go. Let's go to a daily. Get this sorted. I swear on one of these days I'll figure out how MT5 works. In any case, I'm not wasting more time on that with that 5-minute chart right here, though. Nice little silver play. Not quite elevated above 70, so we're not really looking to sell. Not really doing much of anything in that silver market. 15-minute chart right here. I like the 15. You can see definitely how choppy it's been all day long. Not really a trade setup here. Bitcoin, 1 minute chart on Bitcoin. If you want to be a hero and trade a 1 minute chart, it's relatively straightforward. You're up over 70. You're looking to grab that sell on a negative print beneath the 9 EMA. That's going to be your sell signal there. You can see this area is maybe support or resistance. The 9 EMA itself, it's pretty good as just a support and a resistance line right there. You can see we got a beautiful bounce right off of that. So I'm watching that closely. But as far as trading Bitcoin, we'll pull some macro levels here in a second. As far as this goes, this is a nice 1 minute chart on silver. Do you want to sell it? It's coming your way. You just got to get that close beneath the 9 EMA. Stop loss will be right up above that swing high. You have an opportunity there maybe to sell. US 30, fascinating stuff here. I mean, you can see exactly what we're doing. Let's go back to our 4-hour chart here, US 30. Now, I don't believe in ever trading a 4-hour chart on a US index, so don't do this. The reason why we did it is I wanted to show you exactly how flat and rotational this thing's been through the past several sessions. So today, you got a bit of a sell-off here on the open, which isn't a bad thing. Let's go to a 15-minute chart, and right there would have been your buy signal. So is it time to buy back against the stiff trend that's in the US 30? You can if you want. I mean, it's, the beauty of having a strategy is it's not hard to execute. Right there, you could have bought market. So you want to get down in there, but that's all right. You put this swing low. That would be your stop loss, and then you're looking maybe for a profit target. Potentially, if you're one of those people that love market structure and believe that's the end-all, be-all, maybe I can get my cursor to work. That's MT5 for you. There we go. That only took me an hour. That probably is the trade. I mean, the idea is that you're going to get the buyback. To me, I don't like it. I think you need to hit somewhere right in here, maybe with a 1-to-1, maybe 1.5 to 1, somewhere in that zone. Pretty good area. Pretty good area. Let's go ahead and do a quick orb check, and then we'll go ahead. I'll catch up on the messages here in a second, and then we'll go ahead and get on down the line for a Monday session. Pretty good session, though. Really one of those that if you were smart today, you could have made money. Good movement. 662. We're off 662, 663. It's pretty good. All right, 15-minute chart, 15-minute 2-bar orb. What's it looking like? Well, right there, you've got sort of your opening range, opening 15 minutes, second 15 minutes. Get a lot of questions about the orb, probably more than any other strategy that we've done. There it is. Is it good? That's a pretty good one right there. Pretty good one right there. Nice break. Where would your sell be? You'd have sold probably near the bottom. Always a challenge. I get this question a lot. Shane, do you pass on an orb trade because the trigger candle's too big? And I go, yeah. A lot of times, yeah, you will. Sometimes, and one of the dangers of running like a 2-bar orb or an opening range breakout, sometimes the move already happens and you're late to the party. And if you're late to the party, you can't get unlate. I mean, there's no way to get unlate. So if you're late, you're late. That's just the way it is. This would have been a really tough trade for me to take. I don't think I would have been comfortable selling that low. Because think about what we're doing. If you're going to sell right there on that bar close, and then you've got the top of the bar, so you're risking all this money looking for that big trend day down. And, the truth is you already have a trend day down. So you're sort of selling the bottom. Challenging area. If I was going to do it, maybe sell there with a stop loss above the trigger candle to limit that risk. But then again, you have to do that consistently. You can't just do that willy-nilly or you will get chopped up. All right, everybody, let's see. Tina Jing, I can't believe the U.S. beats Canadian hockey team. The message is, sorry, I just got back to it 35 minutes later. What a game. U.S. is up 1-0. Canada just starts dominating. And you watch, if you know anything about hockey, the way that they were cycling, the way Canada was cycling down around the net, I mean, it was just an ass kicking. And somehow the U.S. got OT. Kid got his teeth knocked out, blew his teeth out, and they gave him a 4-minute double minor, which I thought if they didn't score on that double minor, that was going to be the end of the game. And it just worked out to where they killed 4 minutes more time and got into OT. And then the 3-on-3 OT with the Hughes kid who can just absolutely fly. He got a little bit of space and buried it. It was an unbelievable game. I mean, the compete level was so high. It was a privilege to watch it. And, most sporting events disappoint. That one did not. And to be honest with you, I mean, Canada, you could have seen Canada up 4-1 or 5-1. I mean, they had just some amazing chances. The goalie for the United States was, we used to say, JC between the pipes. He was standing on his head making plays, and it was really a privilege to watch it. Early in the morning, though. It was early. We had to get up at about 5 and start tailgating, but it was good. It was fun. Let me see. Babi, should I do anything with a double bottom bounce in the Dow on the 5-minute? No. Stay out of that stuff today. I can't tell you what to do, but tomorrow's going to be a little bit cleaner. It's a trend day. If you're going to try to buy that bottom, we just put that 9 EMA trade up there, Bab, that you might have been able to get that. I mean, we're getting our ass kicked, it looks like. We're definitely down a little bit, but interesting. It's really tough fighting these trends. It's really tough fighting an intraday trend. It's one thing about the 9 EMA where if you're in a trending market, just understand that stop loss is going to be your best friend. It really will be. You got to pull the plug on it if it gets away from you. So, no, I wouldn't. Let me see. Nico, hello, Shane. What's your view on the Aussie Kiwi? Yeah, I'll go ahead and look at that here in a second. Yeah, observing on Monday. Tina, it's not a bad move. It's not a bad move to be observing. Let me see. Danish, what about gold? I sort of gave you my gold spiel. Pullbacks, probably pullbacks from 5,000 right now because we've extended a little bit. I don't want to be holding longs or shorts because you could really get hurt with the trade location. The sweeps are too big. The volatility is really large, Danish. So be careful if you're going to get in there. Ralph H., what's the best time frame for trading the indices? Well, there's a million time frames out there. 30-minute time frame's always been my bread and butter, my go-to. 30-minute market profile. So if I was serious about getting into this market today, which I'm not really, but if I was serious, E-mini S&P 500, you can see that this is a rotational market. Look at the weekly. This is a weekly chart. This is what the E-mini S&P 500 does. You know that it rotates. It doesn't really trend. You can see that the moves are sort of, I won't say incongruent or disjointed, but they really are. So what you want to do here is you want to figure out, okay, when should I be trading this? Is it a good time to be trading this? All right, well, it's rotational, so we can throw some range numbers down and get it on. 30-minute charts, what I'd be looking at, though. I want to see the 30-minute. So right there, opening bell, ding, ding. Actually, that's not. That's the pre-open right there. That's the opening bell, ding, ding. You see the volume spikes. And what are you doing right now? This trade right here is as clear-cut as it possibly could be for me. It's a retracement sell, no question. There's your scalp. It's not an accident. I had somebody on YouTube the other day laughing at Fibonacci retracements. Okay. All right. Look at that. Boom. Opening bell, ding, ding. Head fake. Blew all the retail longs out. Come right off. Spike low. Double bottom. Pull back. I mean, these things line up so often that it's not a coincidence. So, Ralph, to answer your question, if I'm trading the stock indexes, the American stock indices, I'm trading a 30-minute chart. I'm looking at that during the U.S. trading session. No question. No question about it. There's your TPO, time price offering. Does anybody know what that means? Anyone? Bueller. Right there's Friday's point of control, yeah? Actually, that was the opening point of control. Excuse me. What's the point of control right now? Right there. The POC. What's the point of control, you may ask? It's where all the volume is. It's where we're doing business. So we're doing business right on that white line typically. So your white line right there is right around 68.50-ish. It's not an accident, guys. Big round numbers, Fibonacci retracements, fractionals. Not fractionals, but fractals. These are concepts that you need to learn if you're going to trade. This right here, though, what's the trade? Boom. You hit that 38% sell twice, you're done for the day. You're done. Nice little position there. Maybe a 4-lot sell, grabbing 5 ticks. It's $300 or $400. What is 5 ticks? $12.50 a tick, 4 contracts. So you're looking at what, $50 a tick, taking 5 ticks is $250. Put it in your pocket, come back tomorrow. That's what this is all about. That's what this game's all about. A lot of people get really caught up in percentages. I had a fascinating conversation with a trader from the Middle East last week. And he gave me his risk management and everything that was dialed in, and trading bots, 6 trading bots running on a couple of different markets, and it was going to be a good thing. And I was looking at the risk profile, and I said, yeah, that's good stuff. It really is good stuff. Fantastic risk management. I was impressed. And then I started thinking about the way that I trade, and I go, man, Shane, you do things a lot different than that. And And my point is this: there's no right answer. Trade however you want to trade. Just understand this: your losses can't be greater than your wins, or you're not going to be a trader very long. So you either have to figure out a way to win a lot of trades, or you have to figure out a way to get paid a lot on those winning trades. And that's up to you. And I say that, and I get a lot of static for it. I really do. A lot of people, oh, that's a cop-out, Shane. Why don't you tell us exactly what to do? I can't tell you that. I know exactly how I execute that trade. 4 lots. We're selling 4 lots at 68, 69 and a half. I'm looking for a fast 5 ticks. I'm looking for immediate positive price action. Go down to the 1-minute chart. For me, this sell is over in a minute. It's over. If the sellers don't step in and defend that level, then I am out. I'm not playing around. I'm not interested in hoping the sucker comes back down and fills us up. I'm not interested in that. I'm not going for a ride on that trade. I am in and I'm out. All I need is a couple of red prints here on these candles, and we're done. Now, a lot of folks would laugh. They'd say, Shane, you nailed your entry, but look how much further price goes down. I don't care. I don't care. I don't care. You want to know why I don't care? Because I can't control how low the market goes. See, that's the biggest problem we have with traders, and I'm going to go ahead and end on this note. The biggest problem the traders have is they sit there and they believe they can project where the market's going. It's not possible. It's not possible. You don't know where the market's going. Now, we give some next levels out, and we give some key levels and all these different things. But what really makes any strategy go, and what makes the entire thing work and sing and give you the life that all of you are looking for, is you've got to be able to figure out how to make sense of this stuff so it makes sense to you. That's it. And if you can do that, and if you're cool with taking 1 to 2s and 1 to 3 risk versus reward, or if you're cool with 1 to 1s, it's great. Get rid of the conflict. Sit here and trade. That's it. That's all you have to do. But you can't have a conflict. You can't sit around going, oh, I should have stayed in that market. That was worth an extra 10 grand. Oh, you can't do that because you don't know how far it's going to go. If you knew how far the market was going to go in against you, we know against us where to get out at. We know where our stop loss needs to be. That's the best gift that anybody could ever be given, is when to get the hell out when things go wrong. That's all you need to do. When things go wrong, I'm out. Now, if you knew how far the market was going to go in your favor, you might as well buy a lottery ticket. It gets into the concept of knowing. Well, what is it to know how far the market goes? Why don't you just know the lottery numbers? You know what I mean? You can't know the market. You can't know where it's going. You can have some ideas, and you can have some projections out there, and maybe you're doing very well on the year and you want to leave a flyer in and say, you know what, gold's going to hit 6,000. I'm going to go ahead and let this thing bleed and see if we get there. I don't have a problem with that. But for the traders out there, the intraday scalpers that say, okay, it's going to go exactly in my favor 10 or 15 ticks. You don't know that. It can't be known. It's too much going on. So manage your risk, be smart, and take the money when it's there. It's what I've been doing. Money's there, reach in, take it out. If you want to make more on your trade, you load up your leverage ahead of time. Get what you're going to get front and center. Don't sit around thinking you're going to get in on a big move every day, because they don't come around. Except for gold. That's the exception to the rule, right? All right, everybody, I'm going to go ahead and sign off. I didn't quite get to the Australian dollar Kiwi. Actually, Nico, we had a trade idea out on that earlier, actually last week. So that panned out to be a really great trade for us. I'll probably cover it tomorrow. But Aussie Kiwi, watch gold. If you watch gold, you'll see how the Australian dollar is going, more than likely. All right, everybody, fantastic session. I want to thank you all for joining me. Sort of a longer stream today, but that's okay. Monday's a great day for prep, so we want to get the momentum going. We want to take small profits. We want to stack our account with green. I don't want anybody starting out in the red. If you're already in the red for the week, that's fine. Come back Tuesday, Wednesday, Thursday. That's when we do the business. At Thursday, into business Thursday, we should be in the green and talking about how much money we're going to take and blow on the weekend, how much we're going to bet on Team USA over Canada. Bet a little bit on it. Actually did pretty well. Pockets lined on an overtime victory. It was fantastic. It was a lot of fun. All right, everybody, I'm going to go ahead and sign off for right now. If you have any questions at all, head on over to the How to Trade trading room. Be sure to send me a private message. I will get back to you. I reply to all of those, sometimes a little bit later than others. Today, I've got the newsletter to do, and then we've also got the Picks of the Week video that all drop on Switch Markets on YouTube. Be sure to check those videos out if you're interested. I'm not really sure what we're going to be looking at this week. I want to see how today plays out, and I mean the S&P 500 is just falling apart. This feels to me like there's something going on, and we don't have to be the smartest people in the room. We just have to be smart about what we're doing with our cash, and I mean the S&P is plummeting. Wow. Look out. This could be a 1,000-point day to the downside. Do we get a bounce tomorrow? I don't think so. Now, with consumer confidence coming out, they're more than likely going to be lower than we expect. Going to be a fantastic print, fantastic read. I've got to go ahead and get going, though. There's some trades that need to be made. It looks like in U.S. oil. U.S. oil is off about 0.03%. It's flat. I love a flat market. They're a lot of fun to trade. All right, guys, I'm out. Have a fantastic trading day. Don't get swept up in this nonsense. This is a big down day for a Monday. It's going to be a fun 72 hours. I'm looking forward to it. Have a great day. Trade the action well, and we'll talk soon. See ya.